Andrew, how are you?
Good. I'm quite excited. I think I've just seen that you can now put GIFs on LinkedIn. So that's a game changer for me. If that's
God.
now allowed, I'm all over that. So I'm quite happy. I just saw that on my feed. How are
I
you?
mean, yeah, I'm good. I'm good. So for thanks to guys who already joined, we've got quite a few actually joining in as well. Awesome. But yeah, I mean, if you've never seen one of Andrew's posts on LinkedIn, you kind of probably won't understand why he's so excited about that.
Yeah.
But yeah, so I guess firstly follow Andrew on LinkedIn or connect with him, and then secondly you'll get an idea of what he posts, which is very un LinkedIn. And I'm surprised sometimes, mate, if I'm honest with you, how the LinkedIn police haven't gone on and said this is not this isn't Facebook or whatever. But you
Yeah.
do always kind of try to spin it around from a business perspective. So
Yeah, I tried to link it. I just like obviously I mean I try to visually stimulate people and then obviously back up with cold hard knowledge. So yeah, it's very much that. But yeah, welcome everyone. As Amit said, we can see a few people dropping in. So welcome to the show. If this is your first time, I can see a few people first time just dropping in. Thank you for joining us. If you're listening to us for the first time, thank you for listening. And obviously, I can see a few familiar faces. Sorry, names. Shouldn't keep saying faces. We can't see you. Don't worry. But I can see there's a few familiar names in there as well. So yeah, how's your week been? Good.
yeah, good. Yeah, I think look, I guess like everywhere. I mean, everyone's talking about Christmas, and I know it's kind of or the festive period, but you know,
Yeah.
I feel as if that's been going on for the last couple of weeks now, and I think it just kind of sums up what kind of year this has been, where
Yeah.
everyone's now, and normally it's like maybe 2 or 3 weeks before Christmas, people start talking about it, and you're like, okay, cool, it's still maybe a little bit early, but
Yeah.
now, I mean, literally, I'd say from the first or second week of November, that's pretty much what everyone's been talking about, which is cool. It gives everyone something to look forward to. But like I said, just having summarizes and sums up what this kind of year or this year's been like so far, right? People just need something really
But
kind of happy.
the tree's up in the office. Yeah. I came in
Is it
today.
really?
I'm down here in
Okay.
beautiful Berkshire Heights, and I was
Right.
welcomed with a tree. So yeah,
Okay.
that was cool. That was that's the first tree I've seen up, which it does feel kind of suspiciously early, but yeah, it's fine. I mean, let's obviously I've got to get in my red suit and get a bit more grey in my beard. So I'm going to be busy over Christmas.
Well, I mean, this is one of the things. I mean, well, I mean, for those of you who are in the UAE, you'll probably know, but for those of you that aren't, we've got a big sort of long weekend coming up at the end of next week. And it's like a 5-day weekend, which is, I think, very kind of welcome as well. Uh, Very excited. I was like, right, let's go somewhere, let's do things. And I was, kind of just put in my place earlier today saying, the only thing we're doing next weekend is Christmas decorations. Don't get too excited. And so, yeah, the wife had her stick out today, and I was very, I would say politely told, but it wasn't quite that. It was,
Yeah,
but
reassured,
anyway,
reassured about your weekend activity.
yeah,
So
there we go.
I guess obviously we've been doing this now best part of 7 months, and we decided to change the format this week. So obviously, if this is brand new to you, this is regular. But for those of you that have been kind of religiously watching us and listening to us over the last 7 months, we've kind of mixed things up, right?
Yeah, and actually, like Andrew said, when we first launched the Growth Show, we kind of gave ourselves maybe 4 weeks or maybe even 6 weeks and said, let's a couple of months, let's see how it goes. And it's just turned into something that I think we both sort of enjoy, and I think it's also turned into something where people kind of get value. We get a lot of kind of positive feedback. But as part of that feedback, people have been telling us what they kind of like about the show. We've been told sometimes we go into a little bit too much detail on certain topics because which becomes kind of hard for people to kind of implement. So that was very much kind of noted. Um, I think we had one or two that said it would be really nice if you guys finished on sort of 55 minutes and not on 62 minutes, because they always miss the last couple of minutes of a show, or the last 5 minutes, because they've either got to prepare very quickly for the next call or whatever it is. But I guess that's less of a problem for sort of our podcast listeners, which is sort of growing as well. But but anyway, I mean, like, you know, from my perspective, and I think from yours as well, Andrew, kind of thanks for your feedback. Anything you don't like about the show, kind of tell us, right? Because I think from day one, Andrew and I both decided that this show wasn't about us, and it was going to be more about you guys, you know, the people that
Yeah.
kind of invest your time listening to me and him, you know, kind of talk shop for a week, for an hour every week, sorry. And we have a lot of people that tune in every single week, and you know, we're kind of very highly appreciative because that means essentially you've now listened to me and Andrew for about 29 or 30 hours so far.
Yeah, which is utter madness. I mean, that's
which is crazy.
Yeah, I mean, I think you said obviously that was, you know, one of that we both possibly. I mean, for me to talk that amount of time is pretty regular. I think for those of you that know Amit, that's a lot of talking for Amit. So I think
that's like a normal meeting with Andrew, but yeah, not so much for me. But no, we do appreciate it. And so guys, like any kind of comments you have throughout the show as well. So we've got Q&A buttons at the bottom of your screens. There's kind of little chat buttons that you can use. Anything that you want to kind of send across, you know, send it to us. And we kind of take any kind of criticism or any kind of positive feedback, however you want to call it. You know, we take it really seriously, and we try to improve as we're going along. So I guess, Andrew, you know, season 2, I think you know, new haircut, new season. I think it's all aligned. I think we should kind of maybe.
Thanks for letting me know. Thanks for letting me know. I would at least trim my beard, but it's fine. I know you want to look sharp for season 2.
Yeah, did you not get a memo? Sorry, but yeah, I guess what we should do is tell people what kind of a structure we're going to be talking about.
Yeah.
You'll get a good feel for it, obviously, over the next sort of 45 or 50 minutes. But yeah, Andrew, do you want to kind of little 30-second sort of insight?
Yeah. So look, what we're really going to be doing is we're going to be, you know, picking out essentially some of the kind of highlights of the week that we've caught our attention. So you know, we spend a large amount of time researching and kind of having a big old ear globally to see, you know, what's out there from a business perspective, growth perspective, tech perspective. So what we really want to do is the first part of the show, we'll drum in on just some of the things that have caught our interest during the week, and how that could potentially, you know, be impactful for you out there. And basically, you know, saves you that kind of trawl through that we effectively do. So some of those things that are interesting to us, and they could be tech, it could be business, but essentially all growth related, yeah. And then we kind of take a bit of a dive into, you know, the focus of the day. So this is a topic that we've kind of picked out for the week, and we're going to take a dive into that and spend a bit more time, you know, understanding that a bit and the implications and the impact of it. And then lastly, we're going to kind of go into the growth tactic of the week. So, you know, as going back to Amit's point, this show is for, you know, listening and people watching. So we obviously, you know, always want to give value back, you know, and that we want to make sure we end on a kind of growth hack or growth tactic of the week. That hopefully you could either implement in your own organization, or perhaps, you know, conversation over coffees or beers, you know, give some value to somebody else and kind of pass it forward, good Palmer style.
Yeah. Cool, awesome. So let's get started then, Andrew. I think there's been a couple of kind of really, really interesting news stories that have caught our attention. I think they're both ones that we've both sort of been following. I think A, sort of out of our own interests. B, because it does impact sort of clients of ours and different industries of ours. But I think the first one that I think we need to talk about is the Airbnb IPO.
Yep.
So Airbnb are going public next month, estimated to be kind of, I'd say, very kind of early on in December. That kind of final date hasn't been announced. But I just think that's really kind of interesting. A, because it's a hospitality company, you know, attempting to kind of move forward during sort of uncertain times of COVID. And obviously I think the significance of this is very, you know, very big on big hotel groups. And obviously all of us, if we look at it from a kind of tourist perspective, right?
I mean, I think, do you want to, people, I mean, believe it or not, people may not know what Airbnb is, Amit. So it's kind of, I mean, I was quite surprised, you know, when I kind of regular user of the platform pre-COVID, people were, oh, what's that? Well, that's interesting. You know, what is that? So do you want to kind of give a frame of what Airbnb is?
Yeah, I mean, look, so essentially, it's basically if you've got a spare room in your house, if you've got a holiday home, if you've got an investment property somewhere, rather than kind of getting a long-term tenant in, Airbnb gives you the opportunity to kind of sublet um, or rent out, um, the room or the apartment or the villa or whatever you have to its audience on a short-term basis, right? And that's essentially it. So it's very sort of competitive to the hotel industry because typically or previously, uh, your really only option if you were going to a new town or a new city would be to book a hotel room and essentially kind of that would be your only option or only solution. But do you know the backstory behind Airbnb, how it kind of came about, and how the two kind of initial co-founders kind of came up with the idea?
No, actually, first of all, I thought
Yeah.
it was one guy, so I didn't realise it was a couple of co-founders. So no, no, I mean, I've used it, but never kind of bothered taking that dive.
Yeah, it's actually a really cool story because I think there's almost like this again assumption that a lot of these kind of big tech firms in Silicon Valley, come from big sort of engineering guys, and they are some sort of kind of big sort of tech background, and these guys were two designers who work for a design agency, and the main guy, CEO Brian Chesky, him and his housemate essentially were looking at ways of kind of helping them, offset some of their rental payments in San Francisco. So they lived in San Francisco, expensive place to rent an apartment. And then what they saw was that there's a lot of kind of conferences that were happening in the city, not enough hotel rooms, people kind of, traveling from miles away, and they had this great location. And essentially what they did is create a quick website, and put it out there on social and said, hey, if anyone wants to stay in our apartment, we can put some blow up beds up there and all this kind of stuff. And then they managed to kind of attract three different sort of conference goers into their apartment for, that week. And they kind of looked at it, spoke to an engineering friend of theirs and said, look, there's something in this model, right? There's something
Yeah.
that kind of, potentially works, right? This could be disruptive, or if anything, this could maybe make us some money on the side. And so that kind of worked. They launched a platform. And then even in the very early days, most of the uptake was New York, because again, New York's probably more expensive than San Francisco from a rental perspective. And what people were doing in New York, saying, well, I've got a spare room. If I can start to kind of, rent that out and, get a couple of $100 a night, this could be actually quite lucrative and potentially even pay my rent. So they had a lot of uptake, but what they realized very quickly is the hosts in New York were just really bad at taking pictures, right? So, if we look at camera phones and things like that today, we get great quality imagery, but in 2008, right?
Yeah, it's 12 years ago. That's one thing, right? I mean,
Yeah.
it was a long time ago. Yeah.
Right. That just didn't happen, right? You just had, you had okay phones, but nothing really, too fantastic. And so these guys on the weekend used to fly to New York, go and visit these kind of houses or these apartments for all these hosts that signed up, take the images themselves, go back, touch it up, put it on the site, and then all of a sudden the uptake just became bigger and bigger and bigger, right? Which I felt was quite cool. I think it's always cool when sort of, you've got those initial kind of founders that are going out, raising tons of money, but have that kind of initial graft so that, where they understand their challenges and stuff like that. But yeah, a bit of a kind of backstory there. But, as far as this sort of IPO goes, IPO, I've got something else in my mind clearly.
Clearly.
As soon as this IPO goes, why is this interesting, Andrew? I mean, why is this relevant, I think, today?
I think it's interesting now. I mean, I think, look, it has, if you haven't used it or haven't heard of it, I'm pretty sure everyone probably has, but it's revolutionized travel, right? So, I mean, first and foremost, you and I now, when we used to kind of travel to US, travel to UK pre-COVID, it would be Airbnbs, right? The ability to perhaps get closer to something. I think one of the ones I remember was like in Chicago, there's no kind of hotels on Lake Michigan. It's just not allowed for zoning and planning. But obviously, these phenomenal apartments that you could be really close to that and these incredible views. So not only from a business travel perspective, but holiday homes and there's offshoot of businesses that have also grown up out of it. So, you know, people that would look after your property, they would clean it, they would greet the guests, all these kinds of things. There's a whole host of other industries that come through. So I think obviously, you know, what's happened is now, you know, with COVID, obviously it's been massively hit. You know, because obviously the whole travel and tourism industry is kind of, you know, gone through that as well, right? So, you know, what I mean, they've obviously made some tough decisions. I think they laid off 25% of the workforce. You're kind of sitting, is it about 2 billion in debt at the moment?
Well, yeah, because I mean that was done in April. So basically, come March, end of March, lockdown in the States, which is obviously still their biggest market, even though it's sort of global player. Having to pay out refunds. In fact, we had a beautiful kind of villa booked in the States for the summer. And first thing Airbnb did was actually say, look, do you guys need a refund because, you know, you can't travel here anymore? And it was very well done.
Yeah.
And I think they brought some loyalty then, but the challenge is it impacted cash flow massively, right? Yeah. So, you know, to the point of them having to go back to the market and borrow to $2 billion, which is significant.
Yeah.
Yeah. So,
but still had the ability to do it, right?
Still have the ability to do it, and also I think, you know, like you said, they cut costs. So I think what Brian Chesky's done is made some very kind of bold decisions, which was I'm going to get rid of, you know, 25% of my workforce, as you said. So that's about 2,000 people they laid off. We're going to borrow, you know, a ton of money, which kind of gets us through the short term, and really kind of play that long game. Which I think was sensible, and obviously if the market does pick up now, then they, you know, their overheads are obviously substantially lower than what they were kind of going into COVID, which gives them a better chance of kind of bouncing back faster. But a couple of things on that. Yeah, sorry.
No, go on. Yeah.
No, I was just going to say, I mean, where I think this gets more interesting is if we look at it from a valuation perspective. Airbnb in 2017 was valued at $30 billion. And there were so many people talking at that time. I'm sure everyone's kind of heard this, but at that point, they were the kind of highest valued hospitality company in the world, right? Despite having zero assets. I mean, they don't own at that point, certainly
zero
not. They didn't own any kind of rooms, right? It was all other people's inventory, and all they were doing was kind of enabling the booking of that space as such, which made them very unique, which made them, you know, very kind of asset light, but also massively scalable because they didn't have to worry about building new hotels and finding new inventory to grow, right?
Yeah.
And I think in 2017, what was interesting is that valuation was about 30 billion. Okay. When they borrowed for $2 billion of debt, that valuation in April was down to 17 billion, which was really that sort of COVID hit. And I think it was almost a case of, okay, look, we just need this money.
Yeah.
But fair play to them, what they've managed to do, I think because of these cuts, and I think because of some good management and leadership, the IPO valuation that they're going to market with is 30 billion again. So they've gone back up to that kind of valuation, which I think is really interesting. I think if you start to sort of, you know, compare these with with other kind of tech valuations, which are kind of astronomical at the moment. But I don't know, 30 billion, you know, it's obviously an enormous sum of money, but I think when you look at the growth potential of Airbnb, then potentially it works. But I think, you know, I guess one of the challenges is the level of loss. So in Q3, which is normally their busiest season, and there was obviously a lot more people sort of out and about in the summer. They managed to turn that loss into a profit, so they made about $250 million worth of profit over that sort of third quarter, which is obviously a positive sign. But the level of losses they're incurring right now is huge. So last year was 675 million or thereabouts loss in 2019, and they're already at that same level with sort of 3 months of reporting to go in 2020. So look, I think fairly interesting. And when you make that level of loss without assets, you know, you can see why they need to go to market right now and raise more cash.
Yeah, no, definitely. Yeah, I mean, I think, I mean, and look, I mean, you said obviously early December, so, you know, I mean, look, what do we think? I mean, obviously, because I mean, they are still, I guess as an industry, they're still very impacted by other industries, right? So as much as, there's space available over here, I guess, with the vaccinations that have obviously now, coming through, there's a positive impact. Most individuals I'm talking to are desperate to travel. There's kind of a definite desire to travel. Even from now, I'm starting to see some business travel creep back in. I think a lot of people that used to travel for business were almost kind of relieved, but now they feel like some of those relationships need, hand holding, not hand holding, fist bumping, and kind of real connections. So I guess it's still bound, or connected to other industries. So how do you think that's going to affect, that kind of first day trading?
Yeah, I think it can go either way, to be honest with you. But I think there's enough excitement in the stock where I think it will go. I think it'll go up. And again, if you compare it to other valuations at the moment, I think there's definitely sort of some room. But also, I think part of the reason for that is where can Airbnb as a business go, right?
Yeah.
And again, when we look at sort of clients of ours, and it's important that we kind of know what's going on around us. But when we're kind of speaking to clients and advising them, these are just things that they've got to be aware of. And look, they're already in the long stay business by default, because that was, there's a lot of people at the moment who are like, look, I don't want to commit to, annual tenancy agreements. I don't want to maybe go and buy a house, but, is there a kind of long, somewhere I can go and stay for 3 or 4 months, right? Which is not that hotel market. And the way they've subtly sort of adapted the platform for that long stay market, I think is really interesting. Opens up a lot of doors. And new revenue opportunities for them, obviously. But the other thing is what other industries could they kind of, get into? Because, when you kind of look at it and say, okay, well, for example, airplanes, right? If you look at how many planes are grounded at the moment, and essentially what these guys are doing is filling space. Airplanes have got space in them as well. And potentially, is it a case of, especially, the private jets and that, as opposed to larger airlines? But then saying that, the amount of large airlines right now that are grounding planes and pivoting, and changing changing their business models, I don't know whether that sort of creates more opportunities for them. But I think it's definitely a kind of watch this space scenario.
Yeah, I mean, look, they've got that addressable audience, right? As you say, you're on the platform and you're going to be going somewhere. Why not, tie that in with the actual plane ride, car rental? Going back to the original days of things like what was it? The one that William Shatner used to always advertise in the States. I can't remember. Not Hotwire. There was another one.
That was one initially where you'd place your bid, right? You'd bid for
or something. Exactly. I mean, I think you're going to see that. But they've still got that huge. I guess the thing is, they've still got a huge customer base that they can tap into. So the moment that everything starts to kind of get back on track again, they can easily start to communicate with those individuals. And more importantly, because it's app based as well, you're kind of married to that brand, and they can start communicating to you on a very one-to-one personal basis as well, right?
Yeah, and also I think one thing that's worth adding in here is they bought Hotel Tonight, I think last year or the year before, which is a great app.
Okay.
Right, and if you were looking for a room for tonight, that would be a really good app where you can just go in, see what's around you, and it'll show some really kind of good deals. And so again, then I don't think they're quite done with disrupting that hotel market as it is, right? Because through that app, they do have direct access into hotel inventory, and which I think is also interesting. We've had a question in terms of, okay, how does that valuation compare today with the hotel groups? And I think just for context, I think essentially Marriott is still valued a little bit higher now, which obviously they got the Starwood acquisition that kind of helps with that. But Marriott is still just under sort of $40 billion, so about $10 billion more. But Airbnb's valuation still places them higher than Hilton and Wyndham. So again, essentially they're still the second biggest hospitality company in the world, by market cap.
0 hotel rooms.
Yeah, exactly. Right. Zero kind of physical assets, which I think it's a phenomenal kind of business story. But yeah, I think that's one to definitely keep a lookout. I think it's one that I think I might have a play around with on launch day to see if there's some money to be made there. But certainly, I think in long term, I think given what Brian Chesky did, the decisions he made, I think there's some really kind of strong leadership there, and yeah, I think there's a load of room for that business to keep growing. I think
Yeah, definitely.
it's all ahead
Yeah,
of them.
definitely.
Yeah. Cool. And the second one, Andrew. So the other kind of big news story from last week. Do you want to? I mean, this was one that you kind of um,
Yeah,
made me aware
yeah,
of,
yeah.
and yeah, really interesting. So do you want to kind of talk about that one?
Yeah, yeah. I mean, look, this was, I guess, it's very relevant at the moment just because of what Friday coming up. We spoke about this last week with Black Friday, and obviously a huge driver of that is Amazon. But this is something a bit different. So this is actually Amazon Pharmacy, right, or Amazon Chemist, as it were, for us. But essentially Amazon Pharmacy. So they've spent a good amount of time similar to, I guess, Airbnb, disrupting certain, industries. I think if you look at their kind of progression from that original, books to kind of breaking up that industry, and then obviously, their own products and so now is a time that they're kind of going aggressively after that whole kind of healthcare market. Look, backstory is here that they kind of bought PillPack back in 2018, which is kind of first sign that they're interested in a particular industry. So if you look at some of their other previous acquisitions like Whole Foods, so moving into physical retail, space supermarkets in the States, they kind of acquire and then move into this space and then go through. So the interesting thing here is that they're now adding these benefits to getting effectively medication through Amazon now. But what's interesting is they're pushing it towards kind of Prime members. So I think we spoke about this last week. Your Prime members across 3 different countries, same for me as well. The benefits of next day delivery, free delivery, access to their streaming service. There's just a whole host of benefits associated to being a loyalty member, and it's essentially their loyalty program. So what they're talking about is offering up all of these discounted services on I think something like 80% on medication, which is again huge.
Discounts of 80%.
80%, yeah, on medication. And the thing is, like, if you look at the US market, obviously, I mean, it is, healthcare is huge there. And I think it's a constant topic of kind of conversation when they're talking about healthcare. But anyone that's been there, you'll see on every single corner there's a CVS or there's a Walgreens, right? These are huge pharmacies, that obviously stock everything else associated to that. But on the back of this, CVS and Walgreens kind of stocks tanked. I know because I had Walgreens, and that kind of what is that next step acquisition wise? So as we mentioned, we've got Whole Foods that they bought previously and then moved into Amazon Go, that kind of thing. Moving around the clock, so 24/7 pharmacists potentially. Even kind of one-to-one communication that could kind of pull through there.
Yeah, I mean, so I looked into this a little bit more, and essentially, this is what they're going to offer. So why your CVSs and Walgreens are suddenly panicking is what Amazon can do through the power of technology now is have thousands, if not more, pharmacists available 24/7 through their app, where somebody can say, hey, I'm not feeling too good. What are the symptoms? Sore throat, blah, blah, blah. And then literally the pharmacist sends them a link and says, right, click on this, order your medicine, and we'll get back to you as soon as possible. Yeah. And I think what, the prime element, I think is huge. Because look, let's go back a step with Prime. Initially it was, okay, free delivery, then
free delivery
of TV came into play.
Yeah.
And I think what they've been doing is kind of like, right, how can we kind of power pack, the Prime membership to kind of give you more back, right? Because at the end of the day, there's no cleaner money in any kind of online business than subscription money, right? Especially when you're just, when you're essentially paying for a perceived service. And if you look at Prime, I mean, they're generating absolute billions on the back of just people who keep paying every single month because they're seeing that kind of value. You know, like there's no reason why they couldn't offer free delivery to people that weren't Prime members, but you know, this is a way that they can generate an extra, you know, $10 a month or whatever it is. And so, you know, I think that's where it gets quite interesting because now they can disrupt that industry in a much, you know, in a way which means that we don't have to, you know, if we're feeling sick, we don't have to get to the pharmacy.
Yeah.
Right? We're doing it in the convenience of our own home, wherever we are. We know that they've got the distribution networks and investing so much more money in the distribution that, you know, through drones and all of those things that, look, if I want something now and I really need it, then within half an hour or an hour, whatever it is, it's going to be dropped off, you know, whether it's by robot or whether it's, you know, physically. You know, so they kind of just understand consumers, they understand the market, they understand what people want. And I think when you mentioned Whole Foods, and I think it's really interesting because they're one of a few e-commerce businesses that are going brick and mortar, right? So purchasing, you know, and I think that's part of the magic of Jeff Bezos, but essentially you've got that Whole Foods acquisition, which is now fully integrated into Amazon. So again, you know, you go in, show your Amazon app and you know, all of a sudden now they know exactly what you bought. Amazon Go, which I still marvel at, and every time, you know, I'd go in there just to buy something just because I just think it's awesome.
Because it feels like shoplifting.
Well, it's so seamless. And, you know, the thing is, I've gone in there with little kids to try and confuse the hell out of them. You know, because my kids will go in and like pick something up and put it down, pick something else up, put it down. And then that bill that you get within 30 seconds of kind of checking out, where you literally just walk out the barrier, is just so exact that it's really smart. I mean, they just know what they're doing. And again, you start to get to that point where, you know, you might potentially have a pharmacy without pharmacists, right?
Yes.
Where somebody can walk in. I mean, it's just that whole, everything changes, right? You know, so yeah, I think it's really, really interesting. It's game changing. And yeah, I mean, I think from a valuation perspective, it's interesting.
Yeah, I mean, look, I mean, I think the thing is that you know, what obviously there's their first and foremost their market is US, but as we know, you know, they are, you know, dotted around the world now, right? And each kind of let's say each country has its own laws, regulations associated to, you know, offering different services. But what's interesting is you know, as they start to break these down, they start to roll out these services across different places. So even in the Middle East, you know, when Amazon acquired, at that time it was Souq, you know, they started to run parallel. Then it took them close to 2 to 3 years to then become Amazon in the region. Then they added, you know, the Prime functionality, and you could get next day delivery. Then they added the streaming service. Then they had music, you know. So I think it's a natural progression. So it's almost, you know, US is leading the way, as you said, with things like, you know, Amazon Go and the acquisitions there. But there's no reason why he can't kind of start rolling these out globally as well, right?
No, absolutely. And actually, I'll tell you what, Andrew, we missed a really good point here, right? The healthcare industry is so ripe for disruption. Okay, so, and you know, it's funny, like we were talking about the Amazon pharmacy story. So one of my COVID things has been going and watching old episodes and TV series from years back that I just loved, right? And so we're kind of working our way through Scrubs at the moment. Okay.
Right. Yeah.
So I guess if you're kind of under the age of 35 and perhaps older than 55, you'll have maybe no idea what we're talking about. The Scrubs is like a very popular kind of TV show from about sort of 15, 20 years ago. And in one of the episodes, it's all about a hospital. And in one of the episodes, a new medical rep walks into the hospital. The medical rep is a lady called Heather Locklear. And again, if you don't know Heather Locklear, Google her in terms of Heather Locklear in the 90s, and you'll see what kind of I'm talking about.
Not now.
As opposed to now, she's 59. I Googled it the other day. But essentially, you've got this kind of, you know, very glamorous, beautiful kind of, you know, blonde, kind of medical pharma, kind of big pharma executive who's coming in and essentially selling medication. And it was so funny because you're essentially seeing her go in and schmooze all the doctors, take them on there, offer them holidays, take them for fancy dinners. And that's how the industry works, right? And I'd say more so
Yes.
works in kind of places like the States, but that's how it works at the moment, right?
Yeah, yeah.
It's who do you want to buy your medication to? And you get rewarded for prescribing more of
Yeah.
that medication than the next doctor, right?
Well, if you look at all the medication as well, the ads that they run, online TV, whatever, it's always ask your healthcare provider, ask your doctor about this, right? Because it's just a constant battleground of kind of promoting your wares.
Yeah. And when it comes to medical, and again, we can talk about this for hours because obviously we're seeing now all these vaccines being rolled out and, governments trying to claim that this is our vaccine, and actually the companies going out saying, actually, you've not paid for this, it's us, right? We've seen that with Pfizer, for example.
Yeah.
Right. But the point is, this industry just needs cleaning up. And the fact that Amazon have come out and said, look, we can give 80% discounts on medication kind of says a lot, right? I mean, because potentially, and this is the other thing I heard, in the States, because medication is so expensive, they actually have buses of people that drive over to Canada, stock up on 2 or 3 months worth of medication and drive back again because it's so much cheaper. And you get a bunch of old people, essentially who are doing this because they can't afford to buy medication in the States. So I just think that this is going to be, very disruptive in a very positive way. I think Amazon, people are going to trust Amazon a lot more, especially if they can start adding a bit more transparency, reducing costs. And the reality is that a lot of us are going to need medication as we get older. And look, if these guys can make that whole process better, cheaper, maybe, less kind of prone to, I don't know, crazy incentives and stuff like that. I think they've got such a massive opportunity here.
So I guess if what you're saying is if you're kind of opportunistic or you have an entrepreneurial spirit, this might be an area that you might want to look at, right? Right, for kind of picking, there's always going to be business because people get sick. I mean, it's just one of those things, right? That it's never going to go away. So I guess this might be one of those, if you've kind of got that dream board or whatever in front of you as far as what do I need to go after, this might be an area, right?
Yeah, absolutely. But I think when we'll move off this in a second, but I think just a couple of other things. Let's look at what's next for Amazon because I think that's important. And there's a whole load of kind of data and insights about their valuation that they're valued at 1.5 trillion over that at the moment, which is phenomenal.
Sorry.
It is an insane valuation. Their current net profit is about 11.5 billion. But again, if you look at it, that's 133 times net profit, right? It's massive, that valuation. And I had to Google that because I literally lost count of the number of zeros I'm supposed to put in there. I swear to God, genuinely, I was like, is that right? And I just just ask Google. So, but if you look at it, Microsoft has the same valuation, but Amazon literally make, a third of what Microsoft make. So there's definitely some kind of justification that Amazon needs to do. And I think part of why they've kind of gone aggressively into this industry now is because it's such a big industry and it does give them that potential growth that they need to start to kind of justify that valuation. But I think what happens next with Amazon, I think is going to be really interesting. Because I'd say if you look at this 2 years down the line, and I'll throw it out there to you, Andrew. So if I now know, I'm Amazon, so I'm Jeff Bezos, right? And obviously, this guy's, a mastermind and knows exactly what he wants. But with Whole Foods, I now know the food that people buy, right? With all my clothing and all that kind of stuff that I sell, I now know the size of clothes people buy. I know their height. I know their body shape potentially, right? Now with this, I'm going to know what medication they're on. Okay, so what have they taken? Okay, and then the last thing is I also know what they're into, right? I also know what their interests are. So are they athletic? Do they order kind of sports gear, or are they sitting playing a PlayStation all the time, or right? And and not active, right? Now, based on this, what can Amazon do next? What do you think? The next big industry that they could possibly disrupt.
Oh, industry-wise, sorry. I thought he was going to say what can they do next, because I mean they can pretty much do whatever they want. I mean they've got so much data that they could pretty much target anything really. I mean I guess if
so they're going to know everything about us, right? That's worth knowing.
Yeah.
So what do you think?
I guess that, so the next big thing then would probably be like insurance, right?
Right, precisely. And I think that's and I think that's exactly that direction that they're heading in, because that is the next big industry that's just ripe and open to disruption, right? And then when we look at insurance, there's two parts, right? So there's the normal kind of day-to-day medical insurance, right? Which I think first and foremost they can now use. So they can now use more data than what we would ever. We'd never tell. Yeah, we'd never tell an insurance company, by the way, this is the food I eat. This is my body shape. This is this is medications possibly, but you wouldn't say, look, I'm into I love sitting playing PlayStation all the time. That's what I do.
Eating nachos.
You just wouldn't, right? Yeah, eating nachos, right? Exactly. They know this. So imagine. So all of a sudden now they can get much more accurate. They can start to say, okay, cool. This person's very low risk because they're athletic. We know their body size. We know this. We know they eat healthily. Bang, right? They get rewarded. Perhaps the ones who maybe don't need to get rewarded because of lifestyle and all that kind of stuff, maybe they pay a higher premium. But then you look at it and say, actually, what about life insurance, right? Because that industry is horrible. Okay.
Yeah.
It's and more data is coming out there about the premiums that brokers are making. We've spoken to big companies who are looking now to go direct because they know that people are very anti their products. But I mean, do you imagine?
But also, I mean, even home insurance as well. I mean, they're tracking every single purchase to your home. So, I mean, maybe something like, for example, they know that you're running, the home security network because you bought it from Amazon. They know that you've got TVs. They know that you've got Alexas all over the house. So, they know the valuation straight away. So it's kind of, well, do you want to buy, as you're buying an extra TV, do you want to buy some insurance to make sure you got home insurance coverage? It's huge.
Yeah, true. I mean, and this is the point, right? Because they know exactly where you live.
Yeah.
And you start to map in other data to that, and it becomes really interesting.
Scary and creepy, right?
Yeah, and look, I just think these guys are, they're already, absolutely sort of, mammoth business, and I think that I think they'll get split up again in the future. I don't think that the US government's going to allow any business to become that big. But if they do get into these other industries, then like I said, they're just going to take over, kind of more so than what they have today.
Yeah, I think they're also a bit more vocal than the Google boys, because the Google and the Facebook sort of world seem to get involved in things and not really tell anyone about it. But obviously, with Amazon, they're very out there and kind of vocal. It's interesting. We've had a question, but I don't know if we're qualified to answer this, but we've had a question in here saying, would you buy Amazon shares at this price? Do you see the breakup of big tech as a determining factor? So we're going to have to rename this Stock Watch, not Growth Show.
Yeah, but the reality is the valuation makes no sense. But Amazon as a company, if you look forward, makes a lot of sense.
Yeah. Very true. Yeah, it's a bit of a lottery, the old stock show at the moment. So, I think we've got to be careful. I've put a disclaimer if we start giving away stock advice. Well, actually, that rolls into the next topic pretty hard, actually. So look, guys, we wanted to kind of, I guess we've kind of spent a bit longer talking about those industries there. But one of the things that we really wanted to focus on is kind of very much at the now, and on the back of a couple of different things that some of these other guys that we've mentioned, Facebook and obviously Twitter as well, have pulled out. So we want to talk about fake news, and that's obviously, I guess out of respect for the outgoing president, who I think finally last night decided, I mean, with a caveat, but finally admitted defeat, as it were. I think that's what we want to dive into, right? So fake news. and how it looks, and for for those kind of guys out there, just to kind of put this up the top here. Facebook put a stat out just this week, and they basically said that since March, Facebook has labeled 180 million posts as misinformation. So, for those of you that are on the social platform, obviously the big thing was kind of was talking about misinformation. So there's 180 million posts potentially that were misleading, let's say. And then also Twitter have now come out and said, hey, listen, before you like something, we're going to put a fact check label on it. So, before you kind of get attached to endorsing, I guess we could say a like is an endorsement possibly, or, an opinion, they're going to put a check on here. So, what do you think about this, mate? Are you comfortable with this? Is this something that kind of you like or endorse, or is this a bit tricky?
Look, I think this is, people have spoken about this for a long time, right? In the sense of how much power do these platforms have over the content that's on there, and people always point to the fact that actually they're not liable for anything that's posted on their platforms.
Yeah,
they're very kind of well protected for that. And for me now, if they are okay, fine, they're not liable, but now if they are the ones who are kind of almost like the guardians of truth, I have a bit of an issue with that, because I mean, what makes them sort of qualified for that, and what does that really mean, right? I mean, it's scary.
Yeah, I mean, it's a private entity, right? I mean, look, in the case of Facebook especially, I'd say you've still got one individual that controls that whole organization. So it's not even, a board of directors or qualified individuals, let's say, who perhaps would be in that scene. You've still got one man kind of wielding the iron fist, as it were, right? So yeah, I mean, I think it's worrying when it comes into that. But I mean, I guess the only I mean, look, this rolls into. I kind of guess it rolls into, was it the kind of back end of last year when Google came out and essentially said, listen, if you're producing content on your website from a healthcare perspective, and I think it was other professionals like law, you've got to make sure that you are creating medically correct content. And we will be checking, and obviously, this is going to be vetted, and your search results will be impacted. And I guess that's why, we kind of wanted to talk about that today, because, over the course of the last 7 months, a strong thing that we've been talking or actively encouraging people to do is create their own content, create their own, kind of voice, as it were. And as soon as, organizations start to kind of vet this, I guess there's a danger element associated to this.
Yeah, I mean, I agree. Look, the point is everyone's still got to go out there and try and create content, because that's a very kind of sustainable way of building a brand and building an audience. But look, it's just worrying if you've got basically heads of companies who are essentially determining what's right versus what's wrong. I think you have an issue. But look, I think in the general scheme of things, a lot of this is still targeted towards political posts about maybe religion.
Yeah.
Things that cause real sort of conflict, as opposed to kind of B2B posts, right? So I think it's scary in the general scheme of things.
Yeah, I just wonder where it would go, because I mean, at the end of the day, it's a lot of activity or content perspective is potentially opinion based. So do this to get this result, in a B2B space. So a lot of it is obviously backed up by real world experience and kind of real world exposure, but sometimes that isn't there. So I think as much as it kind of sits in that political, as you said, arena at the moment, it does have a danger to creep into our B2B space as well, right?
Yeah, no, that's fair. I think that's a fair point.
Yeah. Okay. Well, I mean, look, that's. I think also on the back of this, what's happened is that I think the thing is that what it does do is it opens up a bit of a bigger door to content manipulation. because what I've seen actually, especially, look, I've got no business on being on TikTok, for example, right? I'm too old, I'm a boomer, as it were. But part of kind of knowing what's going on is understanding that platform. And what I've seen during COVID is a massive rise in a couple of different, I guess you'd call them back in the day, snake oil salesmen. Kind of people creating these phenomenal stories, spinning yarn, emperor's new clothes kind of stuff, but using content manipulation and screenshots of other things, just to kind of tell a story. So as much as that fact check is worrying, I think there is a bit of Wild West going on at the moment, as far as some of that information is going out there, and there has to be some way that we can kind of control that flow of information, right?
Yeah, no, I agree. Well, there's a lot of people making money out of it. I think it's the problem.
Yeah, exactly.
Yeah, I agree.
I just so a couple more points. Just there's two things before we kind of close up the show. One of the things that we want to talk about every week is why should I care? I think that's the kind of next topic. Like, why should I care? From a B2B perspective, and this was a story that I pulled up. So basically, back into TikTok, TikTok had its first ever user to hit 100 million followers. So I mean, there's a young lady called Charli D'Amelio. She basically is incredibly popular kind of content creator on the platform, very dance driven. But just has seen this kind of massive explosion, and the reason I wanted to kind of point it out is, what does that 100 million really mean, as it were? It means a couple of things. First and foremost, she is now herself a kind of entrepreneurial businesswoman. She has endorsement deals with the likes of Dunkin' Donuts, for example. Dunkin' Donuts have created a drink, so you can actually go in and order this drink on the back of her. But also, TikTok now has a policy of paying its content creators. So aside from just kind of these endorsements, it's a platform now that you can actually generate revenue on the back of these views and the back of these followers. And because of the way the algorithm works, obviously she's getting tremendous views on the back of that. Now, what's interesting on the other point of that is Snapchat are launching a TikTok competitor called Spotlight. That's just started to roll out. And that, again, is paying people for viral posts. So it's kind of almost flipping it. So, where obviously in the past, like Facebook and Instagram, where you've gone on there, you've had to pay to increase your views. Now, these obviously two platforms, as your views increase, as your followers increase, they're paying you to produce more content. They're paying you to produce more quality content. So I just thought it was, why should we care? It's just some young lady with 100 million followers on TikTok. But I think it's interesting the way that the platforms are changing.
Yeah, and that's a whole different dynamic, right? When the platforms are, instead of just saying, hey, this is now a platform for your content, this is now essentially something we're going to pay you to continue doing and using. And I think some of that might just be to lock these guys down, right? Because again, if Snapchat's launching a competitor, it might be a case of, look, we're going to pay you, don't jump on a Snapchat. Because I think there's going to be some consolidation within social media for sure, because it's just difficult for people to just create content for every platform. So I think it makes sense.
Yeah, no, definitely. I mean, I think, as you said, it's challenging because there's so many different platforms now there, and we get asked a lot of the time, where should I put my content and where should I put it out? But I mean, I think if you're getting paid, to produce that content, there's obviously more of a desire to go over there from day one, as it were.
Cool. And so I think, Andrew, we've got one last segment, guys, and we want to try and do this in sort of 2 or 3 minutes, so bear with us. But we want to kind of end every kind of show of this season now with a real kind of growth hack, a real kind of tactic, something that can help each of your businesses. Often it's going to be kind of things that we've tried and tested. And I think the one that we're going to mention today is very much kind of aligned to that.
Yeah.
And essentially it's a 2021 hack, right? From a kind of blog perspective. So, I think you guys are kind of aware we create a lot of sort of content, but, we've got a magazine, a very kind of active blog. But what we've been doing over the last, I'd say, 2 months or so is aggressively creating blog articles, which has the words in 2021 embedded within the title. Okay, so whether that's what to expect from social media in 2021, for example, or the one that me and you were just laughing at earlier, which is HubSpot in 2021, what to expect. And the impact of creating this sort of content is people today are very kind of conscious of the amount of content and the volumes of content that are out there on the web. And if they've got a very kind of specific forward-looking or forward-thinking search query, we've looked at the data and literally between sort of now and I'd say the next 4 months, the amount of 2021 search queries, and we're talking about sheer volume here, it's going to be incredible. It's going to be incredibly high, and it's going to keep increasing. Okay, so there'll be people saying, "Hey, how do I do this in 2021? Who's the best provider of this in 2021? What's the best tactic for doing this in 2021?" So if you've got a business that solves any kind of problem where someone is likely to look at, information that's relevant now or relevant maybe in the next few weeks, I would say, look, if you're only going to do one thing, go back and create, whether it's 2, 3, 4, 5 articles addressing each of these different things, and really kind of get those out there as quickly as you can, because I was sharing with Andrew earlier, the impact of the content that we've created from a 2021 perspective is huge. And not just on the local level, but on a global level, we're seeing enormous traction. We're getting a whole lot of kind of inquiries on the back of it. But just from a kind of brand positioning perspective, I think it's such a great hack. Doesn't cost anything. It's an investment of time, but the rewards are potentially huge. Yeah,
definitely. I like it. I like these hacks. These are probably hacks that I said to you at the beginning I didn't want us to talk about. So it's good. That's how big they are. It's like, do we really want to tell people about this? So yeah, that guys, definitely try and implement that if you can. So guys, look, this kind of brings us to the end of our show. Thank you for joining us today, listening, watching, etc. You can reach out to us on LinkedIn. You can email us at growthshow@digitalnexa.com. Obviously, as Amit said, give us your opinion, good or bad, as it were. Or if you've got some suggestions, highlights, spots, whatever you want to kind of focus in on. We're going to be trying to follow this kind of format now, moving forward, just to keep it kind of bubbling along and improve the show. So we'd love to hear your feedback on that as well. Yeah, we're looking forward to kind of cracking on and seeing you guys all next week, or seeing you guys again. We can't see you, but we can definitely kind of see your names.
Awesome. Thanks a lot, guys. Take care, and thanks for joining.
Thanks, everyone. Take care. See you, Amit.
Thanks, Andrew. Take care, mate.